Ladies and gentlemen, welcome to this new Fleet Europe webinar, this time with the support of Business Lease, the well-known leasing and business mobility company. It's my pleasure, ladies and gentlemen, to welcome you. My name is Steven Schroefs. I'm the editor-in-chief of Fleet Europe, and I will be your moderator today. First of all, this will be an exciting webinar. There will be a lot of information, and this webinar is only for informative purposes only. And we will also record this webinar so you can relive it later, but it's not the purpose that you reproduce any information. This just as a disclaimer about this Fleet Europe webinar. Ladies and gentlemen, you have probably witnessed it all. Vehicle leasing prices, car prices are changing dramatically. This also means that the costs of a fleet is changing. And so probably you are asking yourself the question, what to do? Is it a good time, yes or no, to adapt your strategy, to adapt your car policy, or is it better to wait a little bit and see what the horizon will bring? Well, that exactly is the purpose of the webinar today, to give you answers in how to deal with the current circumstances and how to index your car policy. So, welcome again to the Fleet Europe webinar together with Business Lease. We have two excellent speakers for you lined up. And the first one is Hans Kolf. He is the International Sales Director at Business Lease, and he is going to start telling us a little bit more about the challenging market conditions that we are experiencing today. Hans, welcome to this webinar, and thank you very much for the support.
Thank you, Steven, for this introduction. I'm really happy to be here to talk about the current market circumstances and get the opportunity to connect with everybody in this webinar. I would like to start with some market trends in the European market that Business Lease monitors. What we see. Until 3 years ago, pricing and all related costs to run a car have been very stable. As we all know, the current European and even the global market is an accumulation of topics leading to inflation currently. Many different kinds of circumstances are coming together now. For instance, global supply chain difficulties and limited supply of semiconductors are leading to production delays. Automotive production planning and difficulties resulting from this are creating further delays, increasing cost price of raw materials and energy, and also increased cost of financing and rising labor costs. So what are the effects for fleet managers in the European market? First of all, list prices are going up. Dealer discounts going down. In general, higher running costs, the TCO of a vehicle, is increasing. However, we do see a different effect in the Euro countries versus the non-Euro countries. As a final result, we therefore see that operational running costs of new vehicles are increasing. This is applicable for both leased and owned fleet. So what did we notice in the B2B market? Delivery times mainly long, with an average of 7 months up till 15 months till delivery. As a result, we extend the core car contracts to keep our customers on the road, and this also increases the request for rentals. Due to inflation, car policies are under pressure. Therefore, cars do not fit in their categories anymore. Also, we are noticing that fleet managers are seeking for facts to analyze and base decisions upon. So, Steven, this was a brief summary of what we all encounter on a daily basis in today's market.
Sorry for that. I was apparently on mute, so sorry for that. Hans, thank you very much for the presentation. I think it's really interesting that we can also have the vision of a fleet manager. And so I'm really happy that we have invited an acknowledged fleet manager to share how he is handling the current challenging market conditions. And so it will be my pleasure, Hans, to after the discussion that I have with that fleet manager, to also with you look at some possible solutions. Of course, I think it's now time that we can invite Mr. Luc Pissens into the room. And so, Luc, welcome. Welcome.
Hi, Steven. Thank
That you
you.
are here. Luc, you are the president of the Belgian Fleet and Mobility Managers Association, but you're also a fleet manager, of course, at a financial institution at Bank de Groof Petercam. Perhaps first, talking as a fleet manager, can you elaborate a little bit at how many vehicles you manage, where those vehicles are, what kind of vehicles?
Yeah, okay, fine. So, like you said, Steven, I'm also a fleet manager within Bank de Groof Petercam, which is one of the largest private banks of Belgium. We are present in Belgium, Luxembourg, France, Switzerland, Spain, the Netherlands, Germany, and Italy, with more than 1,400 employees. So, to come back to your question, in Belgium we have more than 750 lease cars and almost 100 bikes, which is rather important also nowadays that near the lease cars, a lot of people take also some bikes in their mobility policy. And to see now within the Groof Petercam, of these 750 lease cars, we have almost 53% diesel cars, 8% petrol cars, and then 32% of hybrid cars. And we see that as from 2021, more and more electric vehicles are asked, are delivered. Mm-hmm. So the percentage of electric cars now is 7%, and it will increase within a couple of years and months to come probably in 2026 to 100% of EVs. So if you want to know the brands within Bank de Groof Petercam, well, we are working with more premium brands. So I can tell you that BMW has a percentage of 29%, Mercedes 24%, Audi 15%, and Volvo, we have 9% of the fleet.
Okay, let's continue now in your role as the president of the Belgian Fleet and Mobility Managers Association. So you have a clear view on what is on the mindset of those fleet managers in Belgium. How challenging is it today to operate a fleet with, and Hans already told us, there is limited car availability. Often people need to wait 7 to 15 months and even longer. There are, of course, surging list prices. There is a reducing of the bonuses, etc., that you get from the suppliers. There are, of course, the energy prices, inflation. So it's not really the most positive news today. So how challenging is it for a fleet manager?
Very challenging, and probably I will say something that some things that already Hans said before. So it's correct that fleet discounts nowadays decrease, energy prices increase, and the delivery period of new cars goes from 8 to 24 months, depending on the OEMs. We also see an increase of the lease cost due to interest rates, but also to the residual value of the cars, of course. For the delivery period of new cars, we try to extend the actual lease contract for, let us say, 12 months or more till the new car is delivered. As long, of course, and this is a question of the lease companies, as long as the car didn't reach the technical maximum kilometers. And the reason is that this way the mobility of our employees remains ensured, which is very important, of course. And if not possible, because we have a problem with the car or the kilometers are already reached, We try to go for a short-term lease, which is not evident. As you know, this is rather expensive, and there is not a large choice of a type of car. So this is rather difficult as well for the mobility manager as for the driver. And then about the monthly lease cost, yes, we have several opinions. A lot of companies are working on a TCO2 basis, and I don't like the word TCO. I prefer the real cost of ownership for the company. And this real cost of ownership is taken in account the monthly lease cost of the car, of course, the yearly insurance, the CO2 emission of the car, and the fiscal consequence. Because here in Belgium, the CO2 emission is equal to the deductibility of the fiscal deductibility. And something else that is rather important nowadays is, of course, the cost of the fuel consumption, or the cost of the electricity taken for electric or hybrid cars. And another solution for that can be made is that people or companies are working with a decrease of models, and which the budget stay the same. I will give you an example. A year ago or 2 years ago, people could choose a BMW Series 5. And nowadays, they go down to a Series 3, for example. And this is something I didn't see, but it's possible that companies can also choose for an increase of lease budget. But really, the current economic situation is mostly not done.
Mm-hmm. Okay. I can also imagine, for example, that before that you, for example, can downsize. So from the brand and the model that you just named to the smaller one, that of course this also needs to be communicated in the right way to the drivers. So this needs to be taken care of. I would like to know, what actions could you take and have you taken to secure that seamless fleet management for you, for your company and for your drivers? Because it's of course not so easy, and you will also see some obstacles internally probably if you take some new decisions.
Yeah, of course. So what companies are trying to do is that for each category of employees, they have to foresee in the mobility budget attractive cars to keep them on board. Else they will choose another company to work for, because here in Belgium, a car is a very important sort of remuneration, I think, if we compare to other countries in Europe. Which is very important also is reporting to have a seamless fleet management. So as mobility manager, we have to have a reporting on the fuel consumption. We have to need a reporting on the electricity consumption of the cars. A reporting on the cars themselves, meaning then the CO2 emission, the fuel type, the brands. And also a reporting on accident or damage of the car is a nice to have. And this all is very important to manage our mobility.
Okay. Let's deep dive a little bit further.
Mm-hmm.
Hans already shared also with us some of the challenging circumstances. The first one that I would like to discuss with you, Luc, is the higher interest rates and the energy prices. Probably this has led to an increased total cost of ownership, or real cost of usership, like you mentioned it. What has been the biggest challenge for you and the other fleet managers that you know in ensuring TCO control?
Mm-hmm. For me, the most important thing is the fuel consumption, because we see that there is an increase of monthly lease cost, but this monthly lease cost, we know when the car is ordered. But the fuel consumption, this is something that we can not foresee. So we have to be certain, like I said before, to have a reporting on the fuel consumptions. That can be a very good help for the mobility managers. And why? With this reporting, we have to do some controls on the every consumptions so that people are aware that, okay, they get a car, they get a fuel pass, but they must be aware that the cost of a fuel pass is enormous for the company. And then besides, it should be nice to have sort of a list of tips and tricks to consume less fuel. And this is already a challenge to have a TCO under control. And then your second question was about the increase of the interest rates. And correct, due to that, the lease cost, the monthly lease cost is increasing. And what can help is putting in, how should I say, in competition several lease companies. And then you can see as mobility manager that the differences in cost can run up to just tens of euros per month.
Okay. Just one small question regarding the fuel cost.
Yeah.
Did you ever think about, for example, limiting the fuel that could be taken or the mileage that could be driven as the car? I know probably the car will be used for business and for private use, but is this something that has come up into your mind, or is that not really feasible?
Coming in our mind, yes, but it's a sort of penalization that we do to the drivers, and that's something I don't like. So we have to motivate them to see, well, for example, with the tips and the tricks, how can I reduce my consumption of fuel or electricity?
Mhm.
That is the main thing that we have to motivate our drivers.
Yes. So you are communicating to them with a positive message rather than a negative one.
Correct.
Okay, perfect. And of course, the chip crisis, the semiconductor crisis, is not over yet. We also have more largely a natural resource issue. This means that we have to wait longer for the cars, and cars have also become more expensive, with many car manufacturers attributing less discounts, like you already mentioned.
Yeah.
How has this impacted your strategy and your policy?
Yeah. Well, like you said before, like I said and we said before, is that the impact is that some cars doesn't fit anymore in the budget. And also due to the semiconductors, the delivery period is going up from 8 to 24 months. And due to that, there is once again a decrease of models. People, because of the higher lease costs, go for, and I will take another example, instead of a BMW, I will say for a Q5 from Audi, you go to a Q3 from Audi. And if the delivery time for some OEMs is rather high, you see that drivers will choose another car with a delivery date which is much not so, how will I say, not so long. Another solution to have this budget under control is working with Bastille, Stephen. So what do I mean with Bastilles? This is a deal with your company, the lease company, and the OEM, who will promote these vehicles. And so this can be also perhaps be a solution to reduce the monthly lease cost.
Okay. Also, a follow-up question on that topic. How difficult can it be, for example, if I am in a similar category as another person and that other person has been able to choose the bigger model, and now I need to choose the smaller one? Has this, or could this lead a little bit to, let's say, a negative atmosphere within the company, or can that be, yeah, solved?
Solved? No. The only thing we can do is giving an explanation to these colleagues, telling that, well, due to the economic situation we have today, well, the budgets aren't so high as before, and we have to decrease the models. The only thing we can say.
Okay. Coming then to the policy,
Yeah.
um, every fleet manager has a policy, more than one policy. If they manage multiple fleets or fleets in various countries, of course. And how often do you normally adjust your car policy? And are you always aligned with your management board in adjusting that car policy?
Yeah, this is a difficult one. I think that if we are talking about the car policy, if you got a car policy with some cars that you propose to your drivers, you have to review this car policy, I think, once or perhaps twice a year. So then you can see if the lease cost is increasing, well, then you can adapt your list of cars. As well, we have here, besides here in Belgium, we have to take in account also the fiscal legislation rules. So once again, due to the CO2 emission, there is a deductibility of the car, which costs rather high. The costs are rather high for the company. So here in Belgium, I don't know what the other countries will do, but as from 2026, here in Belgium, all the lease cars should be all electric. So nowadays, we are already preparing our drivers to full electric cars in 2026. I will give you a little example. Here in Belgium, there was the week of the mobility. And then our government tried to stimulate our drivers to come by public transport or whatever. So what I'm doing then is during this week, I had, I think, 20 full electric cars that people can try. So this is once again to feel how to drive with an electric car, so that as we go in 26 to full electric, that people are already prepared. And then your question about the management board. Correct, Stephen. We aren't always aligned, of course, because we see fleet or mobility from a different angle than our management board. But nevertheless, even that we aren't agree always with an open discussion helps a lot.
So it's not that it's always you or always the management that wins the discussion.
A good communication.
Okay, perfect. Now, if you adjust the policy, and I can assume that in these times it's probably even necessary to look a little bit closer to if and when you need to adjust the policy. But if you adjust the policy, which data do you use to convince internal stakeholders that you must adapt the policy? Both perhaps in a positive way in better years, but also perhaps in a more strict and stringent way nowadays?
The word is figures, always figures. So reporting on CO2 emission, reporting on the monthly lease cost, reporting on fuel cost, fuel consumption. I can't say anything else, but this it is, figures, 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 figures.
Okay, so they need facts, and only facts and figures can convince them.
Yeah, correct.
Good. Now, of course, we are in a dynamic landscape. There are also plenty of suppliers. There are car manufacturers, leasing companies, energy companies, a multitude of suppliers. You, as a fleet manager and as the president of that association of fleet managers in Belgium, what do you need and expect from the suppliers you work with to facilitate your fleet management in the near future, to make it even more seamless than it is already today?
Two words always, figures and communication. So we need some info from our OEMs. So we'll give you some examples. Which new cars will come on the market the next years? And how do they see the future, so that we can adapt the policy? Nowadays, we are talking about electric cars, but I think, but I'm not certain, of course, because I I think that within 5 years, there will be from electric cars going to hydrogen cars. Why not? This is something, this info we have to know from the OEMs. And then was the evolution on the autonomy of EVs based on the WLTP. Nowadays, we see that the most full electric cars have what I will say 300 kilometers. And then how it will be in the future. And then the average consumption of fuel and kilowatt hours is also important.
And their luck went offline. Sorry for that technical issue. I think that Luc has clicked on the wrong button. I hope that he can connect soon. Perhaps in the meantime, yes, we can invite Hans again. Hans, we will see, I hope so, that Luc can reconnect. We already listened to some of the answers of Luc Bissens. I think it's clear that indeed many fleet managers are experiencing difficult times and that they are also looking for information, for a better communication, and for solutions. Yes. I don't know in what way that your company, Business Lease, has understood the messages of those fleet managers and is perhaps preparing those new solutions so that they can better align their car policies with the current market situations.
Stephen, what I hear from your discussion with Luc is what I hear from our international customers as well.
Okay.
Yeah, they find it not easy, even as a challenge sometimes, to define changes to the car policy and to underline the actual facts to their management board, as Luc explained. Yeah, I would like to explain how we cooperate to manage this topic together with our customers.
Perfect.
Yeah.
Then I think that it's time now that you can a little bit explain how your company is going to realize that. So we will listen now to what Business Lease has in petto for all of us.
Okay, so thank you, Stephen, again. Business Lease operates in the Central European market, in Czech Republic, in Hungary, in Poland, in Romania and Slovakia, with operational leasing and fleet management. And it's good to know that we really focus on this region. And the region includes Euro and non-Euro countries, making it even a little bit more complicated. So the situation is slightly different in the non-Euro countries, resulting from differences in exchange rates and local base rates that differ as well. This year we received many questions from our customers about their car policies, and they really like to know how to update their budgets and create stability. And to understand the effects now and in the future, we have developed the Car Policy Index as a tool. And this tool is also there to provide a consistent analysis for the Central European region. So what is it, this Car Policy Index? We created 6 car policy categories, each consisting of the most common vehicles per country. This forms the basket per country, and that is updated every 6 months. As you heard Luc explain, he is comparing it every 6 or 12 months, so we have to go for the minimum. The data is uploaded as a next step in a dashboard, as you can see here. And the dashboard analysis shows in detail the behavior of list prices, discounts, interest base rates, and all other lease-related components. So it will provide you an index percentage of increases or decreases per brand in each category, and it provides, for instance, insight in the development of dealer discounts, interest rates, maintenance, repair and tires, and all other components. On this slide, you see an example of a dashboard with a filter applied from July 21st to July 22nd. In the largest graph, you see an increase of lease cost over all 6 categories. Of course, filters can be done and can be arranged. For instance, in the left graph, you see the same effect specified over a selection of brands. A conclusion can be that specific brands increase their list prices while decreasing dealer discounts at the same time. This while other brands in the same category choose a more conservative approach. These differences we also notice in the comparison between the various Central European countries. We can trace back the difference between Euro and non-Euro countries in list prices, impacted by exchange rates, and more volatile interest-based rates. Based on the facts we just mentioned, we can, in graphs and index numbers, analyze your car policy in each country, understand the changes, understand the dynamics of the most common brands. So, what does this bring to you as a fleet manager? Well, in fact, two topics. One, it will help you to prepare a car policy adjustment per country and per category based on facts. Secondly, you can use it to underline your internal business case to the management board, again, based on facts. So, in a nutshell, Car Policy Index helps our fleet managers to analyze essential changes and motivate these changes also to senior management. And in the upcoming period, we have scheduled to analyze all car policies of our customers and prospects again. Thank you, Stephen. And can you take it from here?
No problem. No problem. Thank you very much, Hans. Looks like a promising, very interesting tool. We also have Luc Pissens again in the room. Luc, welcome again. We will now start.
Sorry, I saw that I had a battery for 3 hours, so it's not 3 hours, it's almost 30 minutes. So I think we talk too much.
Yeah, but it's a little bit like with the range that the car manufacturers are announcing for the electric vehicles, you know?
Correct.
Yeah, indeed. But it's great that you are back. We will now have the Q&A. So also to the audience, I can imagine that based on the stories of both Hans Kolf and Luc Pissens, that you might have questions. You can submit your questions for our two experts via the chat, and I will moderate the most interesting questions and the most pertinent questions regarding this topic and how to index your car policy. One of the questions that we already received, Luc, and it's interesting that Hans is also in the room. Just before that, you went offline. You talked about what you expect from the OEMs. But Hans, of course, is representing an international leasing and business mobility company. What do you expect from him and the other leasing companies in terms of facilitating your fleet management in the near future?
Yeah. So for them, it's the same question as for the OEMs. How do they see mobility in the future? Are they thinking that electric car is a solution, and so that the residual value of these cars are coming higher than for diesel and petrol cars to have the lease cost under control? This is one of the big questions to our lease companies.
So Hans, what can you say to Luc?
Luc, that's a very common question. Of course, it's also a very realistic question. But yeah, I would add to it, if you look at Belgium and you look at the Netherlands, I think the electric charging points are really well organized in general. If you look at some other regions of Europe, it's much, much worse. So you have to also take a perspective for electrification of your fleet if it's really possible. So I think from a leasing company, maybe also from an OEM, you could expect some added value on that as well.
Yeah.
So yeah, I agree with you. That's one of the main topics. Many companies are looking for reducing CO2 emissions or becoming zero neutral in a specific, it can be in 2 years, can be in 5 years, can be in 7 years. That's what their aim is. We have to help them to realize that, but we need to be realistic. So hydrogen cars might be an alternative, but might be further away.
Yeah.
But yes, so we really need to give good information on that based on the usage of the vehicles.
Good. Hans, of course, there are fleet managers that have mostly benefit cars that are mostly operating in certain areas. There are other fleet managers that have a mixed fleet with passenger cars, light commercial vehicles, etc. And in what way can your tool, the car policy index, be customized to the car policy of each and every fleet manager?
That's a good and interesting question, Stephen. I would say in general, the tool is mainly based for benefiting, is based for benefiting cars, so passenger cars. The other cars are more the service-related cars or light commercial vehicles. That's a completely different story, and there is much more to cope with. Let's say it like that. And yeah, if you then have a car policy based for your passenger cars, like Luke has for in his situation, then we need to link your car policy to our car policy index, and we can do that. So we can find the corresponding categories, link them together, and that will result in the advice we can put together. So it's really tailor-made. Every customer is different.
Okay.
But the tool allows that.
Sorry.
The tool allows that. Yeah.
Perfect. Great. Look, a question that popped in for you. Looking a little bit further than just the lease cost, what insurance products do you choose as a fleet manager? And can you elaborate a little bit on what are you looking for the most in terms of the best insurance product?
Oops, a difficult one. A couple of companies here in Belgium don't take insurance with the lease company. So you know that lease companies are doing the cars, insurance, fuel car, etc. Well, we see that here in Belgium, more and more companies, and sorry about this, Hans, are telling, well, we'll do an unbundling, and we're looking for an unbundling for fuel cars and unbundling for insurance. And then they are going on the market and try to see a full omnium insurance with a broker or an insurance company. Is this satisfaction to the question?
Well, we will see what the answer in the chat will be. I don't know if Hans, you have anything to say in terms of how to choose the best insurance product for your company?
Yeah, it's depending. In relation to Luke's answer, I would say it's also depending per market. What we see in our markets, Central European markets, it's mainly based on outsourcing to the leasing company. Of course, we need to be competitive on this, and that's what we are. But really, everything needs to be outsourced. So reduction of invoices and reduction of activities on the side of the customer.
Look, and also for Hans, but I would like to start with Luke again. You mentioned that normally you advise to review the car policy and the budgets at least once a year.
Nowadays, with this economic situation we have. Wait, yes, correct.
Okay, yes. Hans was mentioning that the car policy index is updated every 6 months.
Correct.
Okay.
Correct. Yeah.
So there are some questions about how can you decide how fast you are going to index your TCO budgets, because you want to anticipate, but you can't really anticipate what is coming because everything is so uncertain. So is 6 months, is that fast enough? Is that perhaps also too challenging because it asks, of course, for some resources? So is there some guidance to give?
No. I think that twice a year is the best thing to do. You see that most new cars are coming on the market beginning of the year, and then second wave is let us say August, September. So this is 2 ideal periods to adapt your car policy with the new list of cars and see what the lease cost of these cars are. Because if you always take in new cars which are coming on the market, the residual value of these cars is rather high, so the lease cost is decreasing. And also new cars consumption is normally less than the car before you had.
Okay. Hans, do you want to add something?
Yeah, I like what Luc is saying. I agree with him that you should always do that after the moment new cars are on the market. So the two periods you describe are correct. I also think it depends on the size of fleet you have. If you have a very large fleet,
Yeah.
you at least want to have a look at it twice a year, I would say. If you have a smaller fleet, it could be done once a year. That would be sufficient. But you can analyze it twice. And then, especially in the current market situation, it's very good to have a look at it on a regular basis, so twice a year, to see what the dynamics are, so you can anticipate in time. So that's the answer. Again, this is tailor-made, but I would say in general, it depends on the fleet size.
Okay.
If I may, Stephen,
problem.
if you are working with a list of cars, it's very important that you still putting in the new cars. Why? Because new cars, like I said before, residual value is higher, lease cost is rather less. The consumption of fuel or consumption of electric will be less also. So the total, and also you have some, I don't know, let us say cameras on the car, etc., to have less damages. So all this will decrease the total cost of your car. And this is why it's important to review the list once or twice a year, depending on the number of cars you have in your fleet.
Okay.
Luc and Stephen, this is exactly what we do in the Car Policy Index. Every 6 months, we include the six top models in the country, top business models in the country per category. So if there is a newer model on the market, that will be included. So it is the category you monitor, not the vehicle. And the category should be, like Luc said, up to date. So the newest versions for the specific reasons, correct.
Perfect. To go further on the Car Policy Index, because we are talking about a new exciting tool, of course, is that a paid consultancy tool, Hans?
No, it's not. In fact, it is what we call account management. We think it is part of our job as a leasing company to provide that to our customers and prospects. We see it as part of our service. And we also need to do that because we are in a highly competitive market. And we want to show that we are involved in what's happening for the customer. And it's also our aim to keep TCO. Sorry, I should not use that word, Luc. I understand too much, but we want to keep the cost a little bit lower for the customer. And this is a way to manage it together with the customer. So that's the reason we offer it as a consultancy service.
Okay.
In fact, it's included in account management.
The question that also popped in, a question for you, Hans, about the tool. How is in the Car Policy Index and in the model behind, how is the depreciation, residual value determined?
Yeah, that's another good question. The depreciation or residual value is, of course, key in the lease rate of a car. And the Car Policy Index is based on lease rates. The good thing is that we have all this data as a leasing company, and we also have the historic data. So we can make these kind of analysis. It's all based on our own database, of course. But of course, it's really a competitive database because we are in the market. We are, as Business Lease, are in top 3, top 4 in general in the various countries. So that shows that we are competitive. And for that reason, it's using our own residuals, which are competitive.
Okay. Look, you have analyzed fuel consumption between your drivers. What is the exact aim with that project? How to achieve the cost reduction that you want? Are you, for example, also focusing on smart driver behavior?
No, not at all. The thing is that we have to, well, let us say, control how they drive our people. So if there's a consumption of, I will say, give you an example of 10 liters for 100 kilometers, and the average is 8, for example, then we are doing a mail to the driver telling that, well, we see that the consumption of fuel is rather high. So can you please be prepared to read all our tips and tricks to decrease the consumption of fuel.
Okay.
So once again, we have to motivate our drivers. This is key.
Okay. Hans, your tool is covering 6 segments, six
Yeah,
markets.
6 markets and 6 categories per market. Sorry,
Okay.
it's 5 markets. 5 markets.
5 markets.
So Czech, Hungary, Romania, Poland, and Slovakia. And then in each country, it's covering 6 categories.
Okay. Of course, those are all Central European markets.
Yes.
Why? And is there a possibility that customers that have also a fleet, like look in France, in the Netherlands, in Belgium, can perhaps via business lease also get information for those countries?
Why is that? At first, we are in 5 countries. We have the knowledge in these 5 markets. We think these are five specific markets. As already explained, it's euro and non-euro countries with the different complications as a result of that. We think if you look at the current situation in the market, car policy index is really necessary in our markets at first. Of course, it would be great to be a European company, but we are not. We are focusing really on the Central European region and covering that and doing that as well as we can. The tool is a worthwhile addition to that, but we cannot, unfortunately, not help Luc with this perfect tool.
No. Okay, but indeed, you have launched this tool in all the markets where you are present.
Yes. Yeah, it's the same tool, so we can use it on both a national level and what we call international, but in fact it's regional in the 5 countries together.
Okay.
Yeah.
Gentlemen, we need to end this webinar. I would like to thank you both for your insights and your expertise.
Pleasure.
Look, thank you very much. Thank you for joining the webinar and for answering the questions. And good luck with the upcoming indexation of your car policy. Okay.
Thank you. All a
Hopefully,
pleasure. Thank you, Steven.
yes, hopefully we can meet with you in another event of Fleet Europe. And Hans, also to you and your team, thank you very much. Success with the tool, with the car policy index. And also thank you very much for supporting this Fleet Europe webinar. Okay.
Thank you very much, Luc and Steven. Thank you.
Okay. And of course, I hope to meet with you in an upcoming event of Fleet Europe. As mentioned, there will be a recorded version of this webinar that we will share afterwards on our platform, fleeteurope.com. And we hope, of course, that you can also relive the interesting comments from both Hans Kolf and Luc Pissens later on. And then, ladies and gentlemen, there is one important date that I would like you to write down in your agenda. On the 6th of October, we will have a digital event around fleet connectivity. So the 6th October in the afternoon. So if you would like to know more about telematics and fleet connectivity, this event is for you. And then in November, we will all meet again for the Fleet Europe Summit on the 16th and 17th of November. We are going to Dublin in Ireland to have a great Fleet Europe Summit with, of course, the Fleet Europe Awards. Thank you very much, and I hope to see you next time. Bye-bye.